So it was really interesting, the trend that we've been seeing. In 2018, actually, we had fewer store closures than in 2017, but 2019 is starting out to be another year for major retail store closures. So year to date, we have at least 5,163 store closures that have been announced. Compare that to just over 5,500, but in all of 2018. Though to be fair, when you net out the closings with announced new store openings, you get a net 3,577 store closures that have been announced so far this year, compared to 3,075 in all of 2018. Now, some of the closures are from bankruptcies or liquidations. Others, though, are just closing underperforming stores and a more typical pruning that does often happen after the holiday season. So Payless is closing all 2,100 of its stores left over. Gymboree, all 749. Charlotte Russe closing 512 stores. All of those three are because they're being liquidated after failed bankruptcy reorganizations. Ascena Retail, remember, that's the company that owns Ann Taylor, Loft, Dress Barn, Lane Bryant, Justice, Maurice's, and Catherine's. They're going to close 400 locations collectively. And then today, as you mentioned, Dollar Tree said it's closing 390 Family Dollar stores. Last week, Gap Inc. said it's going to close 230 Gap brand stores over 2 years. Destination Maternity is shuttering 117 doors. There's a lot more, but those are just some of the big ones.
What's this going to do to all that real estate? How's it going to get reused? And what's the knock-on onto the real estate companies and the REITs that own these?
So again, it depends, because not all of these are necessarily mall-based. Some are going to be in strip
Some are
centers.
freestanding.
So if you've got freestanding or strip centers, sometimes, you can put in a dental office, you can put in a Planet Fitness, you can put in something else a little different. Now, that is starting to happen in the malls as well. It's a little easier in the strip centers because of the way that the co-tenant agreements are written about what is allowed and not allowed to be sort of around those stores. But it's interesting, as we've been following the mall occupancy rates, and they haven't dropped that much. But the mall itself is starting to look different. You've got more food places, more services, and less actually, apparel stores are far, far fewer than they used to be in the malls. So you have to really kind of dig in beyond the numbers, because the occupancy number doesn't really tell the whole story.
You see it in my town. I've lived in my town for now more than 30 years. And when I moved there, there were a lot of retail shops there. Now, practically everything is service. It's either a gym or a yoga place. I was going to say a massage parlor, but I don't want to say it. It's not that. It's yoga. Though there are spas, day spas, and things like that.
You can't get a massage on Amazon. Not yet.
Yeah, not on Amazon.
Not on Amazon, not yet. But it is changing drastically, and the stocks are higher because, we've got 390 stores that are pretty underperforming. And so if you're an investor, you don't want to keep stores that are open that aren't making any money.